It is March 10th, Friday, before the market opens. Fridays, of course, are important because that's when the numbers count. Whatever the stock price is at the close of business day will determine whether or not an option contract is in the money or out of the money. Of course, since I'm selling short, that is, I'm creating the contract, I always prefer it to finish out of the money. That's where any contract that expires without being exercised, that's 100% profit and 100% gross free cash flow. I'm having trouble this morning. Of course, it could be because I've been up since 2 a.m. But anyway, it's difficult. Let me put it another way. Assumptions. I assume a lot. By that, I mean, I assume you know this or you know that or whatever. And that could sort of leave you in a lurch if you're just a beginner, a newbie. I don't trade options. I create and sell them, and I let them run to expiration. I don't try to buy out of the contract. The market, if you got a good solid stock, that is a company that's not going to go out of business, and it's making a little money, doesn't have to be an outrageous amount of money, but if they're making a little money, they're viable, and therefore they'll be continued to be traded unless they're bought out. But I've covered that before. At any rate, the market is an auction. In other words, you have somebody bid a price, somebody asking a price, and then when all the bargaining's done and they come together, that's when you have a deal. So when you're selling options and let them run to expiration, it tends to work in your favor, my favor. From the standpoint, I get my premium up front. As a hobby, I do some, occasionally I'll go to the casino. I'm pretty cheap. I don't like to lose money, so I don't go often, but sometimes I get a wild hair, and that's what I do. Anyway, the way that the casino has the advantages a lot of different ways. My favorite game is blackjack. And if you play that perfectly, you don't make any dumb mistakes, the house has an edge of about 1.5% to 2%. In other words, you're definitely going to lose over time that amount of money. But to me, that makes it an affordable game. But if you follow the same rules that the dealer follows, you think you'd have an even chance, right? No way. So what is the secret of the blackjack that favors the casino so much? Is that you have to play first. So that may not sound like much, but it really is. In other words, basically, let's say you got a blackjack table and you got 6 players, and they've all got to make a decision of whether to take a hit or stand or double or whatever they're going to do. So every player who busts out, that is, he gets more than 21, the dealers won that money regardless whether the dealer ever wins or not. So there's a little bit of an analogy here in that by letting the options that I create and sell run to expiration, I've got my money up front. I got my premium. Excuse me. So that's a big deal. I mean, it's subtle, but it's a big deal. If you're trading, you're really trying to time the market. And I mean, if you win that game, you've done very well for yourself. But if you don't, you can lose quite a bit. And over time, when it comes to options, the people who are creating and selling the options, like me, we're going to win more than you do if you're a trader. You're buying the options. So anyway, that seems simple enough, and it's something I assumed everybody knew, but maybe everybody doesn't. So at any rate, Friday's important because the options expire at the end of the day. My account settles on Saturday, which means all my options that are in the money are exercised and those out of the money are not. But at any rate, those contracts are done. And so whatever I have, whether it be cash or stock, I can use to cover the sale of new contracts on Monday. Payday! So at any rate, I thought that was worth the mention. What was it, Thursday or Friday, that a Fed statement just rattled the market? I guess it was Thursday. I mean, today's Friday, so it may have been Wednesday or yesterday. Can't remember precisely. Anyway, the Fed came out and said they're going to keep raising interest rates until the inflation rate falls within their target. So a lot of the people who are deluded into thinking that there's going to be a no landing or soft landing miss the point. In other words, to curb inflation, we have got to have a recession. Simple as that. And we'll only have a recession when a lot of people are laid off. When people are laid off or think they may lose their job, they don't spend money. Or not any more than they have to, unless they're just idiots. At any rate, the recession's coming. And of course, since I'm selling short, that works well for me unless the world comes to an end or the underlying stock that I'm basing my contracts on, which happens to be HanesBrands International, HBI, if it were to fail or if it were taken private through a takeover, then that would, I couldn't write options on that anymore because it just wouldn't be, it just wouldn't be tradable. So, of course, in that case, I just switched to another stock. And I guess maybe this time it's appropriate for me to talk about a screen here. Let's go back to yesterday. Now, this moving averages chart has consists of my stocks I like to follow. Now, some of these I wouldn't write options on those on a dare, but I put them in there just to sort of see how what I am interested in writing options on fares with the rest of the market. Now, the green there means that the price is more likely to go up. Now, that's only in the context of the moving averages. What we're seeing now is we're going to see an entire market decline. Now, HBI, I think, is going to, when it gets into the range it is trading in now, between $5 and $5.50, that's getting really close to the liquidation value of the company. So I I don't think it's going to take as big a hit as the more popular stocks, because since when they suspended their dividends, it pretty well took them down all at once. But at any rate, and this is a thing you should look at here. I've talked about the clicks. How do you choose the strike price? Well, I just printed this out, made a few marginal notes that you may find enlightening. I hope so. There was a link to this. Well, any of the daily web pages over the last couple of 3 days will have this down in the educational section. To put that, see if you click on the educational links, it takes you down to the educational section. Yes. Okay. This has been a little bit rambling, I guess, but if some of this you don't know, it'll strike a chord, and for those who are already the experts, please forgive me. But if you are getting anything out of this, please subscribe. And if you like a particular video, hit like. That helps me shape to the audience. And if you want to be notified when I put a new video out, hit notify. Okay, now I got to go into post-production and cut out all the, or as much of the as I can. It's early in the morning. This is my first cup of coffee here. I'm not sure I'd get any more sane after having a cup or two, but maybe so. All right. Have a good day and let's make some money.